Hey everyone, and welcome to my channel. So Warren Buffett spoke out on Kraft Heinz today and reaffirmed his support for Kraft Heinz. He believes it's a fantastic company to be invested in. I happen to agree with him. That's why I doubled down on my investment whenever Kraft Heinz took a drop on Friday. Warren Buffett said he did not sell a single share, which is pretty much what I predicted in my last videos, that he wouldn't sell any shares of his stock in Kraft Heinz. Now, the video that I posted today, or I'm recording today, but but the video I posted on Monday was actually recorded on Sunday. This was before Warren Buffett spoke out, and Warren Buffett said that he's holding on to his shares in Kraft Heinz, and he's perfectly happy where he is. He said the $4 billion loss does not bother him, which is typical for Warren Buffett. He's really a long-term investor. He doesn't really, the short-term fluctuations do not cause him to panic. That's one of the reasons why he's been such a successful investor. When you invest in the stock market, you have to have nerves of steel. You have to be able to take looking at the red and then making sound investment decisions about whether or not you want to buy more or where do you need to sell and things like that. And selling is really the answer whenever a stock plummets like this, especially with one like Kraft Heinz. The revenue that Kraft Heinz gets per year compared to the assets that it has is actually quite a good ratio. And Warren Buffett points this out in an interview on MSNBC, which I'll be showing a part of in this video. Warren Buffett did comment that he had paid too much for Kraft Heinz. He actually made he actually distinguished it. I think he said that he didn't pay too much for Kraft, but he paid too much for Heinz. I can't remember which way it was, but he actually had an ownership stake, from my understanding, both of those companies before the merger, and he was a big player in that merger. Warren Buffett and 3G Capital were a big player in the Kraft Heinz merger. And Kraft Heinz opened up in the market at a market cap in 2015 of about $78.15 billion. And Warren Buffett said that he thinks he may have overpaid at all, and he had overestimated the value of Kraft Heinz. Now, I actually share this with him because I too overestimated the value of Kraft Heinz, and the reason why was because the balance sheet indicated that the assets of the company were at a certain number, but it turns out, according to Kraft Heinz yearly review, that they actually overestimated their assets by about $12 billion. Obviously, that affects the valuation of the company, and whenever a company reports that it has less assets than what it thought it had, they have to report it as a loss on their earnings report. If it were not for that, Kraft Heinz revenue would have been up this year. It actually would have had a very strong year. I mean, it would have been up in 2018. It actually would have had a very strong year if this had not occurred. I am suspecting at this point, based on the information I have been able to obtain since recording my last video, that what probably triggered the SEC investigation was this mistake, whether intentional or not, that Kraft Heinz made on assessing how much assets it actually had on the books. And that would be something I think that would trigger an SEC investigation. Now, the question is whether it was an intentional misrepresentation, which would then, of course, result in the change of leadership for the company. And I don't think it would actually hurt the company that much long term, because the food industry is so simple, and any leader with common sense would have a similar strategy to what Kraft Heinz has been employing. You can't argue with their dominance in shelf space in retail and grocery stores. Kraft Heinz's business model has been working, despite what some people have said. You go to Walmart and you can see all the Kraft Heinz product. It's obviously they're doing something right, because they have made their products available to the consumers. But I digress. Warren Buffett actually but I digress. So let's talk about how I did before I play Warren Buffett's video. So when I first started investing in individual stocks, you see, I have a lot of money. Most of my cash is in retirement accounts. And I did have a brokerage where I had invested in municipal bond funds, because I was in 2017 and 2018, I was all about the bonds. I loved how they paid monthly interest, but I wasn't really getting the return I wanted off of bonds. So I decided to try and kind of do different investment strategies. I still have quite a bit of bond holdings in my retirement accounts because I do like bonds. I like their stability, and I like that they pay interest every month. And I also have index funds, mutual funds, and ETFs in my retirement accounts. But whenever I decided to try individual stock picking, because I watched these YouTubers like PPC Ian and Jeremy from Financial Education, and both of those guys, I love those guys. I love their channels. I really enjoy their content. I don't always agree with them, but it's always fun to watch people who have different opinions from you. And sometimes you may find out that you may have missed something that they caught and that you were wrong, and then you can change your opinion. It's one of the great things about listening to other people who and their opinions is that you can adjust your strategy based off of what you learn from others. So I think that's a wonderful thing, and I would recommend anyone who does invest to watch other people that are known to be good investors on YouTube and on business networks, and listen to them and be open to criticism. Even though it would come indirectly because they're not talking directly to you as a person, as one person. If you hear something and they make a good point against your investment strategy, you may want to reconsider it. So like I said, it's like what the Bible says about believers. Iron sharpens iron. That same principle applies to investing. So when I first started investing, I just had 4 stocks. I had Just Energy, Deep Globe, Norboard, and what was that? What was the other one? Well, I'm not going to try and recall all of them right now, but I had 4 positions when I first started investing. Now, M1 Finance allows you to buy fractional shares, so that allowed me to start investing with a very small amount. So I took some cash. I think it was about between $200 and $300 from my brokerage, and I transferred it to M1 Finance, and I started a small investment portfolio. And I tried it out for a couple of months. I failed horribly the first couple times I tried. It was just absolutely awful. And this was before I really started realizing that I really need to know what a company was worth before I bought it. So I started off with a very small amount, and about December 6th, I bought into Kraft Heinz at $6.25 per share. At the time when I bought into Kraft Heinz, I think the market cap was somewhere around $60 billion. But after some time, after I started seeing really good returns, I said, okay, I think I'm getting the hang of this. And after I saw my formula for valuation was working for me as an investor, I decided to go all in. So I took all the cash I had in my brokerage account that I had accumulated while I worked at Gulf Power, and I put it into 2 portfolios at M1 Finance. One a REIT portfolio, and the other one a dividend stock portfolio. And this, of course, Kraft Heinz is a stake in my dividend investing portfolio. I have about, if you can see here, I've invested a little bit over $900 into it. I'm down right now, obviously. So I put in all that money on January the 10th. It's like I guess a little bit of the money got there first. I don't know what happened there, but it may even have been from. Well, it could have been from dividends because the balance was too low. But anyway, so I put it in on January 10th. Now, at the time I put it in on January 10th, the value of the company was significantly lower than the market cap that I bought into it at the beginning of December. If memory serves, I bought into this company, I think at around a $55 billion market cap. Yeah, it was about $55 billion. Now, I had valued the company at about $70 billion when I bought it, on January 10th. So obviously, given the accounting issue with Kraft Heinz concerning their assets, but my valuation of the company was overvalued, but it was because I was given incorrect information. So luckily, I bought in at a low enough valuation to where, see, right now I have Kraft Heinz at about a little bit under $60 billion. Because most of my money was bought in at 55, I still actually have a pretty good stake in the company as far as like where I stand with valuation. I still bought the company for less than it's worth even today. This is why, everyone, whenever you buy into a stock, you want to make sure you have a good cushion between what you think the company's actually worth and what the market cap is. Because if there's a discrepancy, such as like a miscalculation of the value of assets or a significant change in income, then you have a cushion to where you're not all of a sudden in a stake in the company that was overvalued when you bought into it. You don't want to buy in at a company at a higher price. You want to buy in at a lower price. And I'm not talking about stock price. I'm talking about what the value of the company is at the time that you invest in it. So right now, given the $12 billion loss and looking at Kraft Heinz balance sheet on their website, I have determined that Kraft Heinz is currently worth about $59 billion. And that's what their market cap should be. Now, if you look at Kraft Heinz right now, their market cap is $42.6 billion. And you can see they had a loss today, too. So Kraft Heinz is probably going to be a good buy for a while from a value standpoint, in my opinion. So I did not do bad with Kraft Heinz at all. I am very comfortable holding Kraft Heinz. Ooh, look at that. Louis, that's ugly, isn't it? See, this is all this stuff. This is not from loss in sales. This is from a accounting error. And it remains to be seen whether that accounting error was intentional or not. But this is a very ugly EPS here, just for the record. And you can see the dividend is now $1.60 a share. So, but you see the yield's about 4.5 still. So, percentage-wise, if you're buying Kraft Heinz, you're getting about the same yield as what you were if you bought earlier, because it was yielding about 4.5%, I believe. So, the yield percentage is still the same, just the dividend per share is now lower. So, I'm very comfortable with this. I feel like I know exactly what's going on. I don't think that Kraft Heinz, because they've already corrected their mistake before the SEC concluded its investigation, I don't think there's going to be any major penalty to Kraft Heinz. And if there is, the leadership will just change, and then life will go on. So there's a lot of capable people that can lead a food company. I mean, a food company is not very hard to manage, really. So Warren Buffett also had some comments about. So Warren Buffett also had some comments about Kraft Heinz. So I'm just going to go ahead and play through some parts of this video for you.
People watching that because you own 26.7% of Kraft Heinz. Right. It came out with a lot of bad news on Thursday, with its earnings missing, with an SEC investigation being unveiled, with a write-down of the brands. And by the way, management saying on the call that they didn't anticipate things would necessarily get better in 2019. They do see improvement in
You forgot to mention we cut the dividend.
Oh, I forgot about the dividend. You're right. I forgot to mention that. Let's just get to one of the questions we have from a viewer, T63. This is Rich Before Dad. What are your thoughts on Kraft Heinz following all the current news, and what is your biggest concern regarding Kraft Heinz' future?
Well, we have some very, very strong brands at Kraft Heinz, and as I pointed out earlier, the company earns about $6 billion pre-tax, but after depreciation, not after amortization, but after depreciation, earns $6 billion on $7 billion of tangible assets. It's a fabulous business. It's in terms of return on tangible assets. I mean, this is a great business. We're sitting here at the furniture market, but return's much higher at Kraft. It's much higher than it is at JP Morgan. It's much. You go up and down the list. There's very few companies that are earning $6 billion on $7 billion of tangible assets. But we paid $100 billion more than the tangible assets in buying, and we overpaid in Kraft. I don't think we overpaid in Heinz, and we borrowed money that related to projections that have not been met. We earned a lot of money, but we were paying out a lot of money, so we had very little in the way of retained earnings to reduce debt. So